the Occidental people would like to talk to me. And I said, fine, I can talk to them anytime. Vicki Hollow, CEO, was traveling, and she'd call me the following morning. I said I'd meet with her anytime. By 11 o'clock, we had a deal, and they had us committed unequivocally, come hell or high water, for $10 billion. And if the deal is made with Anadarko. So they had to get their own board approval, but they walked away with the 9/11 happened or anything like that. They had $10 billion for the deal.
Did you do this because you're betting on the oil industry or the Permian Basin or on oil prices, or is this just the terms of the deal itself?
Welcome back, everyone, to the Audacious Money Witch channel, where we talk about investing and trading stocks, bonds, and crypto assets around the world. Occidental Petroleum is a well-known energy company because over the years it has become Warren Buffett's favorite energy company. It pays you dividends. It's traded on the New York Stock Exchange with the ticker symbol OXY. Now, as the oil price drips and drops, the stock price is falling apart. It has crashed in the last 4 consecutive weeks, moving to its lowest level since April 2022. After peaking at $70.73 earlier this year, Occidental has dropped by more than 26% to trade at $52, giving it a market cap of over $47 billion. So why does Warren Buffett love this company so much? And what's the secret sauce? Is it time to buy Oxy stock yet, or wait for the oil price to get lower? Have you sensed there is a crash coming our way as the Fed is about to cut rates? Because I have, and I will talk about it later in this video. Berkshire Hathaway has accumulated over 255 million shares worth over $13.28 billion. His position accounts for more than 28% of the entire company. Warren Buffett's stake is notable for 2 main reasons. First, Buffett has become the most successful investor of all time, with Berkshire becoming the first financial services company to attain a market cap of over $1 trillion. Many investors tend to invest in the companies that Warren Buffett invests in. Second, it is the biggest energy company in his portfolio, with Chevron being the other one. Recently, Buffett has been reducing his stake in Chevron, selling over 3% in the last quarter. Why Oxy shares are plunging? For starters, Occidental Petroleum is one of the biggest oil companies in the United States. It operates its business in 3 key segments. First is oil and gas, second is chemical and midstream, and marketing. In its oil and gas segment, the company explores and develops oil and condensate, while its chemicals business is involved in manufacturing basic chemicals and vinyls. The marketing segment is involved in transporting and optimizes oil operations. The current form of Occidental was formed in 2019 when the company acquired Anadarko Petroleum after winning a bidding war with Chevron. The deal was worth $55 billion, which is higher than the current combined market cap of $47 billion. It was partially funded by the $10 billion loan from Berkshire. The Occidental stock price is crashing because of the ongoing crude oil plunge that could even get worse. Oil price WTI crashed to $66, down by over 20% from its highest level in 2023, and is hovering at its lowest point in over 14 months. Brent, the global benchmark, fell to $69, much lower than the year-to-date high of $92.13. The 2 benchmarks have formed a death cross pattern, pointing to more downside. The main catalyst for this sell-off is the return of Libyan oil, weakening global demand, and expected oversupply. Most non-OPEC members are expected to continue boosting output in the foreseeable future to take advantage of OPEC Plus cuts. The U.S. has moved to producing over 13 million barrels per day, while Canada is expected to near 6 million barrels per day. Therefore, analysts expect that the oil industry will move to a supply surplus, which will lead to weaker prices in the near term.
Did you do this because you're betting on the oil industry or the Permian Basin or on oil prices, or is this just the terms of the deal itself?
Well, the oil prices are the big determinant over time, obviously. If you're in oil, same thing is true if you're in copper for copper price. So oil prices are enormously important, but I was familiar with Occidental and generally familiar with the Permian Basin, although I've never been there. If I were there, I wouldn't know what to do. But no, it was a sensible deal for us, a sensible deal for them.
Occidental, like other energy companies, do well when oil and natural gas prices are at an elevated level. This explains why its annual revenue jumped from over $29 billion in 2021 to over $36 billion in 2022. Its annual profits peaked at over $13 billion in 2022. Analysts believe that crude oil prices may continue falling, with those at Citigroup and Bank of America expecting it to drop to $60 in the coming weeks. The most recent financial results showed that its oil and gas division had a pre-tax profit of over $1.6 billion in the second quarter, higher than the $1.2 billion it made in the first quarter. Its average oil selling price was $80 a barrel, meaning that its revenue will drop if prices remain this low. OxyChem owns and operates manufacturing plants at 21 domestic sites and 2 international sites. OxyChem competes with numerous other domestic and international chemical producers. OxyChem's market position was first or second in the United States in 2023 for the principal basic chemical products it manufactured and marketed, as well as for VCM. VCM is a precursor for PVC. PVC used to make piping, building materials, and automotive and medical products. OxyChem ranks in the top 3 producers of PVC in the United States. OxyChem's competitive strategy is to be low-cost producer of its products in order to compete on price. I think this is where Warren Buffett finds the secret sauce in Oxy.
We sent a lot of money to Siberia, and they brought one.
We never got it back either.
We got one little vial of oil. The guy came to see me one time after I became chairman, and he showed me this magnificent, exactly the kind of oil they wanted, and that's the only oil we ever saw.
Its chemicals division had a pre-tax income of $296 million, while its midstream and marketing had over $116 million. Analysts expect that its third quarter revenue will be $7.52 billion, up from $7.21 billion in 2023. For the year, analysts believe that its revenue will be $28.31 billion. Analysts' prediction is not always as accurate as predicting the oil market. But do you know who has the best prediction for oil price? The bond market. As the bond yield heads down, including the 1-month yield and the 3-month yield, exit the 5% yield, the Fed is always too late to the party, as they try to manipulate its entire market. Markets are manipulated, yes, but they're still structures of tightly bound, self-organizing complexity which lend themselves to sudden non-linear collapses. Just as thunderstorms scent the air before their arrival, market crashes often announce themselves in the autumn zephyrs. Markets don't crash when everybody's in full-blown panic. They crash when the headlines and the data are reassuring. Analysts are confident in ever higher profits, and complacency reigns supreme, evidenced by record high household allocation in stocks and bullish sentiment readings. Markets crash after a brief bit of panic selling is immediately bought, and markets are returned to a permanently high plateau of valuation as we saw in August. As the S&P 500 shot back up within a whisker or two of the all-time highs. Punters buy every dip because this quick reaction to any drop has been richly rewarded for 15 years. And everyone has confidence in the Fed put. The belief that the Fed will move heaven and earth to restore market confidence and wealth effect. In other words, market participants have embraced moral hazard. There is no real downside. There is only upside to buying every dip. Markets crash where the rot beneath the surface is invisible or goes unnoticed. The few doom and gloomers who note extremes are immediately mocked off the stage, and the headlines toot the resilience of the economy, markets, employment, profits, and the techno wonders heading our way. And last but not least, the 2-year Treasury yield and the NASDAQ index, a loaded mousetrap if there ever was one. This oil crash is the key, pointing to a bounce at 63 WTI, but as the Fed cuts, we are going into an unemployment recession. Oil will show the true strength of the economy. It's certainly not as rosy as the AI hype train portray. In terms of Oxy stock, it's oversold right now, but I am not buying just yet. I will wait more patiently as it drips down even lower. That's just me. You do your own research. This is not financial advice.
Essentially, when you buy into an oil, a huge oil production company, how it works out is going to depend on the price of oil to a great extent. It's not going to be your geological home runs or super mistakes or anything like that. It is a investment that depends on the price of oil. And when oil goes to minus $37, it happened the other day for I guess it was the May contract. You know, that's off the chart. And if you own oil, you should only own oil if you expect these prices to go up significantly. I don't know whether they'll go up significantly or not, but it doesn't work at $20 a barrel. And everything the oil companies have been doing, whether it's Exxon or Occidental or anybody else, it doesn't work at these oil prices. That's why oil production is going to go down a lot in the next few years, because it does not pay to drill. Now, to that extent, if you're an Oxy shareholder, you'll join me in having made a mistake so far in terms of where oil prices went, and who knows where they go in the future.
It's way harder than you think to predict oil prices.
But with commodities, it's particularly dramatic. If there are bad debts and energy loans, you can imagine what happens to the equity holders. So yes, there's risk. They take a long time. They earn decent returns. I've always said about energy business, it's not a way to get real rich, but it's a way to stay real rich. We will deploy a lot of money at decent returns, not super returns.
There's no convincing the complacent. You either sense what's coming or you don't. It's like a sixth sense, in a way, an intuitive awareness developed by absorbing huge losses in previous unpredicted crashes. But never mind, a little autumn shower never hurt anyone. And so nobody carries an umbrella on a day that it starts out sunny. And clouds over too quickly to respond or be ready.